Welcome to Your World in Agriculture for this December 7th, 2024. Here's the rundown. Pre-report estimates for USDA's supply-demand report. Also, the money flow in ag commodities. No surprise right now. A trade skirmish impacting crop protection products and also hog feed costs will continue to drop in 2025. We take a look at the prices first off for nearby corn. It jumped jumped this week nearly 2%. Soybeans saw a 4-cent gain. Otherwise, both markets are trading at 4-year lows. USDA releases its December supply, demand, and crop production report on Tuesday, December 10th. Production numbers will not be revised from the November report. However, the trade is looking past this report to the January report, and that will be the time when USDA actually finalizes all of its estimates from the crop production season this past year. However, there is a look at pre-report estimates for the demand side of the balance sheet, and right now the trade is expecting the USDA to come in at 1.88 billion bushels of U.S. corn ending stocks for 24-25 marketing year. That would be lower than its November estimate of 1.93 billion, but still very large for the market to digest. For soybeans, the U.S. ending stocks are expected to come in around 471 million bushels. That would be slightly above the 470 million bushels from the November report. And for wheat, 816 million bushels on Tuesday expected versus the 815 million estimate in the November report. World ending stocks for 23-24, no changes expected according to the pre-report estimates. For the 24-25 marketing year, though, for the world ending stocks for corn, they are expected to come in around 303 million metric tons. That's slightly below the November at 304.1 million, so that could be slightly bullish for the market on Tuesday. Soybeans expected to come in around 132.9 million metric tons for the world ending stocks, and that would be slightly above 131.7 in November. For wheat, the world ending stocks expected to come in at 257 million metric tons at exactly the same as the November report. So again, the USDA numbers will come out on Tuesday, 12 o'clock Eastern Time, 11 o'clock Central Time, and the market might have some slight reaction. Looks like, according to the estimates, maybe corn will get a bid on that day. Money managers lighten up on their long corn positions. According to the Commitment of Traders report out on Friday, this is what it looked like. The money managers now 88,220 contracts long this week versus their 109,000 contracts a week ago. For producers and merchants, they added to their net short positions in the corn market, now totaling 303,000 contracts. So very short this corn market. For soybeans, money managers slightly added to their net short positions that now total 72,000 contracts. The producers and merchants remain just slightly short the market with about 19,000 contracts this week versus 40,000 a week ago. Speculators are net short the Minneapolis and Chicago wheat markets. They have not been bullish the Chicago wheat market since mid-2022. And the funds are record long the hog futures market and net long the cattle futures. Crop inputs and tariffs. Any trade tariffs with China could spark price inflation in some key herbicides, insecticides, and fungicides with that base material built or sourced from China. Ag firm CHS tells the Red River Farm Network that this topic isn't talked about enough. U.S. imported $563 million of China's pesticides in 2022 and also $223 million last year. That was according to the United Nations Comtrade database on international trade. Cheaper hog feed is expected in 2025. Farm Doc Daily at the University of Illinois reports the average swine feed costs in 2024 were substantially lower than feed costs in 22 and in 23. A further 13% drop is expected for 25. Futures prices suggest that corn and soybean meal prices are likely to remain below their long-run averages well into next year. Current projections use corn prices ranging from $4 to $4.25 per bushel, soybean meal prices ranging from $275 to $325 per short ton. Now, cattle futures prices dropped 1.4% this week with holiday demand weakening. Cash cattle prices have jumped sharply in the past 3 weeks, supported by border closures to Mexican feeder cattle. The closure was due to a New World screwworm case in a cow that was located in southern Mexico. Again, be sure to subscribe and like Your World in Agriculture for more farm content. I'm Mike McGinnis.